Good evening, I'm Giuseppe Basile. I'm the analyst and trader and mentor you can find at the website www.fibstalkertrading.com. I also have a blog where you can find this free newsletter at www.fibstalker.com. Good evening, today is Sunday, February the 15th, 2015, and this video is a weekly review that I distribute to my newsletter subscribers. If you want to receive this newsletter, this review of the 13 markets I follow, you can subscribe the newsletter for free on this website www.fibstalker.com, and I'll gladly send you this on Sunday evenings after I record it. So let's start from the first market, the euro dollar. Let's start as usual from the weekly time frame. And as you know, this market we identified that after the fact this 140 level, 139.70 level here, which actually has been pushing price lower so far, and it has a target that is 108.96, 109, and it's possible for this market to go back into this level before a continuation higher. Continuation higher would be only an opportunity to sell this market again. In fact, this market, as you can see from the break of the 61.8% level here, it's now destined to continue lower. So any bounce, if this move higher continues, is going to be an opportunity to sell. So if we look at the daily time frame here, we will see that this market is putting a sequence of measure move higher at the moment. Is being respected, and this is important to follow this sequence. Price went from lows to highs. Participation is 112.60, which preparing to first target. The next measure move failed, and the market came to trade again into the old way back here, which is what is holding up this market at the moment. And this area has been tested twice, and market then got into that area, dipped into it, but never broke this 112.63, and that's the important level for price discovery. So there is a possibility for this market to continue higher now into that 116.35 level, and we will keep studying the sequence of measure move, because as soon as the sequence of measure move fails, we will have an opportunity to sell this market again. So at the moment we can have a number of levels that are capable of stopping this market, the higher level being an extension short here at 123. If the market gets there, it's a long way from here, and it's possible that the market will never get there, but either through a violation of the current sequence of measure move higher, or resistance level materializing at some point, will be able to capture the continuation of the move lower. Another level to watch is to 116.70. Moving to the SP500, the SP500 has been moving as anticipated. We were able to identify the one that 1827 level. It was 1832 when that was initially identified. It's an extension long, which is pushing price into that 1295, and actually we had 1295 touching that high and that first target of this long extension that lasted a number of weeks here. And we can count 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 18. It took 19 weeks for this setup to get into the first target, but eventually it got there. As you know, I'm looking for price of the SP500 to get into 2500. You can review one of my premium webinars on fxtrade.com if you want to know why and how we are going to get there according to my analysis. So this market is an extension, so there is a possibility for this market to just continue higher into the next second target of this measure move. Now this second target is gonna come um, actually in few weeks. We might see price getting into this 2234 level. The reason why the market can go there is that that's the second target of an extension area of support here, which worked very well back in mid of October last year. Moving to the dollar index, let me change back to the normal range here. The dollar index is actually finally reacting lower a little bit here, and of course we studied the euro because this dollar index futures has much less volume when compared to the euro, so that's the market you want to study. In this case, this market is retracing, and there's a possibility to trace all the way into that 92.90. If the market stops there and starts moving high again, there would be a level, an important level to watch, and that would mean that also the dollar has reached its relative high, and it's ready to start moving lower. If the market, this dollar index, moves below this 92.11, we will see this market trading all the way into the 90 level here, and that's the next level you want to watch. Congratulations to those who took longs in gold, as I mentioned in the past months, and now since mid of 2013 has been into this area of potential support starting at this 1229, has reacted at the beginning of that area once, twice, three times, and then dipped into that area, but eventually the sequence of measure move broke, and we saw this price start moving higher. Now this price has not moved higher very clearly, as I mentioned in the past weeks, and we had a sequence of measure move. As soon as that sequence of measure move reached the second target, I mentioned that this market was due for a correction. The reason for that is very simple. Once this market has pierced and broken the sequence of measure move short, and that happened when price broke this 1207.90 here, then price came back, but did not come back in a clean measure move. So there was a broken measure move here. As soon as price got into the second target, we saw selling, and I mentioned this level with 2 weeks, more than 2 weeks in advance. It was a low to high here, and last Wednesday we saw price trading into 1219. So where this market can go, this market can continue higher now into the next measure move, which will be above previous high 1351, and that's just because it's trading the next measure move in the sequence here. So if that continues high, it's going to be into 1351. Moving to the US dollars, Japanese yen, this market has also been very technical. Moving on the starting from the weekly here, we know that this market on the weekly has been trading this 94, bringing it to first and second target here. You can review the analysis of the US dollar versus Japanese yen I published on fxtrade.com on August the 1st. You can look for Japanese economy, search for Japanese economy, and you will see that. Now when we look, before we look at the daily, let's go back to the weekly and see whether we're going to have the next measured move. The weekly is neutral, is going to wait for price to get into this 1290 before 1290 before committing, and at the moment there is some support on the daily time frame. I know that support before the fact, more than 1 week before the fact, identified this 115 116 level. I mentioned that there was an area of potential support. He acted as a support twice, and then lately again we saw a not well formed measure move, and we will have probably this week the proof whether this market is going to bounce again higher or going to trade into the again into the 116 level. And that time, we don't know, that time could be the time that the level is broken. So we're going to retest this 118.16. If 117.60 is pierced on the downside, we're going to see again 116 being tested here. So be very careful in longs. um, Moving to the euro versus the Japanese yen, we know that the sequence of measure move in this market has been broken, and by breaking the sequence of measure move, we know that now this market is due for a more for a deeper retracement, and actually the sequence was broken when we saw this high to high participating here initially, as you can see here at these July lows. The market participated and then went into this level again, and then eventually broke the 61.8% level. The market got into that first target. This is a basket setup, and now we are looking for uh, um, another bull retrace here. If the market continues higher, that's the level where we could see participation on the short side. We also study the sequence of measure move higher here. When it fails, that's the time to get involved. Shorts again. 137 70 would be the level to watch, and remember that this market has the potential to go all the way into the lows here of 121. So if you're able to catch this 137.70, that should be a level you get involved. Of course, in my method, I never sell the actual level. I'll always look for confirmation that comes from studying the sequence of measure moves on the smaller time frame, the sequence of measure moves that are induced by the algorithms working on all time frames on high volume markets. Now, if you want to learn how I look at the market and how to time on the smaller time frame, in these free videos I don't show the smaller time frame 4 hours, um, 15 minutes and 1 minute. But if you are interested, you can contact me or join the Fibstalker Methods coaching program. It's a 7 months program in which I show and teach how to look at the market the way I do, and provide you with an innovative edge that allows you to model algorithms and build a trading system which is based on the rules that we use to model algorithms. Moving to the pound versus the Japanese yen, this is another interesting market, and this market is retesting the weekly time frame again here. Those who follow me will remember that this market looks strong, but the reality is that what it did, it's actually trade into a level or area of potential resistance here, and now the 50% of that level, which is 184.20, is being tested again, as you can see here. So the market reversed as it tested that level. Now this market is testing a short potential area of short here, but is still in long, and it can be shown very clearly and nicely here. It's very technical market here. Found participation at this 165.80, broke price into the first target, and then again it traced traded into the next level of participation, and again hit the first target into that area of resistance, just pushing price lower at the moment. The point is that the up move has not failed just yet, and the shorts will be confirmed on this very large time frame only if and when price gets below 169.40. So in a nutshell here, we have to see programs participating shorts at this level starting from 184.20 to push price into the next area of support on the daily, and that's starting at 173.28. If price gets below that area and pierces on the downside the 169.39, then we will see the end of this sequence of measured move area and the start of a continuation lower here. That's not the case just yet, so those who follow my method know that they have to study the sequence of measured move area getting into that 184, and if that breaks, that's an indication of a short in this market. Moving to the euro versus the Canadian dollar, I've mentioned this 138.50 level of support back in May last year, and eventually the market could not react permanently until that level was tested. Now the level was tested back mid of January this year, and now this market is has actually retested the level twice, so giving two or multiple opportunities to enter here long, and it has recently retested the old way halfway back. So this is an indication of continued participation long. Now this level, the 141, is being retested. If it's retested successfully, we had the possibility to see this market continuing higher and into that 145, 46.50, and that would be a potential area where we could see participation on the upside. Now consider also that there is potential participation short here from this extension short, so we'll need to see whether longs or shorts win in this battle here. If 141, 45, 50 trades against this week, that's going to be an indication to continue on the long side in this market. Moving to the pound versus the US dollar, you will remember that last week I mentioned the fact that the sequence of measured move short has failed, and that happened, and it's very clear on this daily chart, that happened once we saw price piercing above the 143.48 level, and then the market came back and actually continued trading on the upside here. It didn't come back to trade on the old way halfway back here, and this market is actually trading an extension and went into the first target, and there is the potential for this market to continue higher into 155.14. Now on the weekly time frame, remember that the reason why that break is valid is because this market is within a potential area of resistance, of support here, which is identified by tracing from lows in 2009 to recent highs in 2014, and that's the reason why we are seeing this move higher. Where this market can go, it can actually go to a number of levels, and a lower level could be this 159.57. So if it continues higher, that's where we could go. This market could stop before and will stop probably together with the euro. You know that the pound and the euro, they work together. Looking at this Australian dollar versus US dollar on the weekly time frame, you will see here that this measured move here, which showed participation on the downside starting from 097.44, pressing to the first target and second target. This market has not been capable of moving much lower here. It's hovering around, for 2 weeks has been hovering around the second target, and there are a number of reasons for that. No interest in on the weekly time frame to keep pushing price on the lower time frame, and price is within this area of potential support here, so there is a possibility for a reaction higher. If that's the case, we will probably see this price moving into the 082.45, and if market reacts at that level, there is going to be a continuation lower. That's a good opportunity to get short this market. Otherwise, we might see, if price breaks above this 083.90, we might see a reaction and then an opportunity to get long this market and try to trade it into the old halfway back here, which would come at 093.66. So that could only happen if price gets below this 083.91. Moving to the US dollar versus Canadian dollar, likewise the US dollar index, this market is moving lower. When we look at the bigger picture here on the weekly, we know that this market came into this 126.22, which was a level that we identified once we saw that the previous area of resistance was giving up. Now, after the fact, we were able to identify the levels that were pushing this price higher, and this is not an idle exercise or an exercise. This is a very useful exercise because it allows us to perform price discovery here, and now we know that 106.70, there was participation price into the first and second target. This allows us to know where the next potential area of participation long is going to be located. So if this market continues correction, it has the potential to come all the way into that second target, which is 1 to 2040, and if we get there and we start getting participation on the upside, there is the possibility for a 600 pips move here, or 580 from 120.40 to 126.22 again. So it's very interesting times for this market. If you took the short here, potential area of target here is going to be 120.45. And New Zealand dollar versus US dollar, second last market. You remember this market has actually pierced the 074.33 and was not able though to come and retest the old halfway back, or at least not yet. So we're going to see in this market has also pierced the extension short here, the next extension short from the lows to lows here, and by piercing the level is telling us that there is a potential for this market for a retrace into an extension that could be as high as this level, the 077.92. Now if that's the case, look at where the first target lines up. There's a possibility for the market to get into the level and then correct into 068, and that would be quite a good trade here. That would be 079 to 068. We're talking about 1100 pips here, so it's very good opportunity to keep an eye on if the market gets into that 077.92. Finally, last market is the US dollar versus the Swiss franc. You will remember that this market a few weeks ago had that slide down. It's not really a slide down. I mean, it opened way below and opened right at that 086, or around that 086.50, which is the old halfway back from lows to highs, and the market in 4 weeks went up into the opposing measure move here, which is from highs to lows, and that is that 093.47. So that has been tested twice, and there is the possibility for this market to come back to retest the 065. So, well, we don't know that just yet. We have resistance at this level, and there's the possibility to ride this move lower. Okay, this is it for this week review. I hope you enjoyed the review. I hope this is useful for your trading, and if you want to look at and learn how I look at price, the way I do modeling the presence of algorithms on all time frames, and you also want to learn to time on the smaller time frames with the Fib stalking timing technique, you can come to fibstalkertrading.com and send me an email as well if you want to participate in one of my programs. I'll be very happy to help you bring your trading to the next level and trade naked charts without indicators. Thank you very much and have a great trading week. Bye bye now.